Hi folks, it's Adrian CryptoBurb speaking. Welcome to today's exclusive video report. And today's analysis is going to actually focus on a comprehensive outlook in comparison between many different time frames, right? I'm going to kick off and review the daily chart, 12-hour chart, 4-hour, and maybe even hourly candlesticks or bars, right? And this is all to kind of like give you a little bit of a detailed insight and better understanding for how Perpendicular Pro works, right? This is this private system of mine that I use, this custom set of amazing indicators that is very profitable, right? And let's kick it off. Let's kick it off. So first of all, I'm a trend follower, right? So I do naturally am biased towards trend following strategies and trend following systems, right? So whenever I would open up the chart, especially on the longer time frame, this is going to promote and highlight, the trending environments, right? Because most of the time, if you have a look, the trends emerge over the long-term time frames, right? It is over the longer time frames, which is daily, weekly, or maybe even 12 hours, that you see those major tails developing in one direction or another. Otherwise, if you kind of like wanted to focus on just a little bit of a fraction of that, right, and focus on the hourly bars of something as insignificant as, let's imagine, this very local chapter, then what you're going to see is you're going to have this complete mesh, right, this complete mesh of this insane chop and noisy sideways. And each and every single time frame lower, that you take and have a look at, it's basically going to have and include more noise, right? So in order to step away from the noise that is not technical, that is more random, that is basically again more about martingales or martingale strategies, right? For gambling, right? So basically, when you have a lot of noise is a statistical representation of random walk, of random movements, right? Where the technical analysis doesn't have much influence or a sense, right? Because those tend to be more like, more or less like a coin toss, coin flip. So if you have 50% odds of, head basically coming up tails or heads, it's not necessarily going to be relevant to keep betting on one or another, right? Because you're going to have as many losses as wins technically, right? So you have to search for different ways, and which is where the position size matter comes in, right? However, like I said, I'm a big proponent and fan, major promoter of trend following strategies, right? So those longer term tails develop over the long term trends and timeframes. And in order to do that, we can enable something that is called a baseline, right? Our baseline is this adaptive moving average. That is a hybrid combination of this sensitive kind of like, mm, sensitive measures, right? It is adaptive, that is more sensitive towards basically towards the shorter time frame, or the more recent news, right? There is this technical regime where you could argue that the more recent data is more relevant to the local price action, right? That a price has memory. However, what's more recent, basically, this price is more influenced by what is going on, let's say, a couple of days ago or the last month versus what was going on, 5 months ago or a year ago, right? Why this is arguable, because how much relevance or how much recency there is, there is definitely something to this, right? There is something essential to that, as traders often look up at the local peaks and the valleys, right, to decide about their entries and settle the supports and resistance levels, right? So arguably, again, the traders are now going to look at the, let's say, $25,000 level as the main, X resistance that flip into on the polarity change principle as the new support, right? And they would base and frame and anchor their minds around $25,000 rather than imagine, $60,000 or $17,000, right? So applying these trend promoting strategies, trend following strategies, one of obvious moves is highlighting the adaptive moving average, right? The moving average that is more sensitive, where you can see that is following more carefully this entire situation, right? So imagine we want to display a classical moving average, right? Let's have a simple moving average. That's not going to be this one. That should be this one, I to suppose, right? So the second one is basically the 200-day moving average, and this is the 200-day baseline. So what you can tell is that the 200-day baseline is following the price action more closely and more carefully, right? You can tell that there is much more relevance and an actual, adaptation, if you will, right? This custom following, um, that is more credible, more reliable, right? And on another note, we've got for the comparison the 200-day simple moving average, which is not kind of like, again, biased towards more recent data. It's kind of like indifferent, right? So it's a simple arithmetical average. It doesn't have any geometrical sense to it, right? It's just a simple arithmetical average. So you can tell that there's credibly and reliably less lag, right, when you apply the adaptive moving average, known otherwise as the Berbicator Pro baseline, right? So this is where you want to display the trend, that is going to give you better timing entries, right, better timing exits, because each and every single time you know that this adaptive moving average, more recency bias, just curves down, it's going to be a more significant factor, and giving, it's going to give you basically a sooner trigger, a sooner alert, right, before the market turns. So before the market has started curving up, on the 200-day simple moving average basis, it started already curving up, when the major breakout happened, all right, in January. So you're basically looking at this distance, this amount of lag, right? So this amount of lag is the wasted opportunity, is the lost opportunity if you're a trend follower, right? That would have made you wait from $17,000 all the way, until basically $21,000 or so, right? This is a huge opportunity cost. So you up using and utilizing, applying the adaptive moving average, the baseline, the Berbicator Pro baseline, is going to give you more thorough understanding for, well, what is the actual fair price representation? What is the actual fair price value, right? So you do want to follow and keep the track record on the Berbicator Pro baseline, right? This is a good, fair representation of sensitive trend that is more focused on the shorter term recency versus, what was going on necessarily 5 years ago, right? So understandably, this should be a fair representation of the more updated value of the average that helps you react faster and basically book in, chip in much more money other than waiting, right? So the entry size and the entry size is of course dependent upon your risk preference and risk tolerance. However, even if you apply the casual rule of thumb of 2%, this heuristic, 2% of account risk, then buying at $17,000 is going to be and yield so much better returns than just buying somewhere around $21,000, right? And if the size increases, you can make hundreds of thousands of dollars of that difference. So this is the amount of lag that you're going to get, right? And this moving average now that is adaptive, that is custom. It's not something that you can find over the internet. It's not EMA, it's not GMA, it's not TMA, right? It's not any sort of like a triangular average. It's not linearly weighted moving average, and so on and so forth. So those are very, very, very different custom tools that we're using here. Otherwise, if we step it lower to my favorite time frame, which is the 12-hour chart, right? Uh, excuse me, I wouldn't necessarily use the 200-day moving average. I would use instead this so-called high time frame trailer or kind time frame trailer, which in this context is one and the same indicator. So what it's going to do is going to base my and adjust to my trend following breakout system, right? Trend following breakout system. So trend following and trend following on the breakouts is a little bit different, right? Because you add in the additional factor, additional filter that is defined by the breakout, and the breakout can be confirmed in many different factors, right? You can have a breakout that is confirmed just on a technical level, breaking previous support or previous resistance that is defining the breakout. It can be a percentage traveled, in one person, in one direction or another. If you know that there is a resistance and it kind of like just breaks and hides below, it's not necessarily a credible breakout. However, if it, just continues to move on and it just pumps 50%, it's credible. Besides, often when you get to see the volume spikes, right? When you see the volume spikes, the volume bars basically producing better turnover over the day, better volume, better interest, then this is what you can tell that the breakout is credible, right? And so far, we've got this credible breakout on the other chart that I uploaded on Twitter and everywhere else on our Discord. There's basically increased volume on the breakout up here, right? At the bottom of the bear market. So this is a credible, good signal. And besides, I use here specifically the volatility filter. The volatility filter to the trend following strategy is called, high time frame trailer, basically, right? So this high time frame trailer adapts to the volatility and follows the trend. You can tell that it moves in the direction of the trend, and it lets you continue continues to let you basically chip in and trail your stop losses. This works as a dynamic stop loss level, right? So would use my stop loss level based on that. And the way it would be calculated, long story short, of course, there's a nice mechanism behind it. It's a custom indicator tool that we've got. It's basically adapting to the open price minus 3 ATR. And ATR is an average true range, which is a volatility indicator, right? So we can tell that whenever there is this credible breakout, you don't want to be in a position when there is clear trend reversal. The clear trend reversal is confirmed with breakout confirmation. And in this case, this breakout confirmation comes with the ATR volatility breakout, right? So what I'm saying is that if this high time frame trailer kind of like protects you when the trend is uncertain, right? And it definitely gets you out of the position when the trend has reversed, right? So we can tell there's been a little bit of sideways. The trend following strategies do not really work well on sideways, right? Because trend following means that you base and assume that each and every single breakout that you get is a new trend emerging. New trend that is persistent, that is a sequence of higher highs and higher lows that just still continues to persist in this direction. Otherwise, it may be also used to the downside, right? When there is this chop, this sideways that is irrelevant, that is noisy and more or less random. When it finally breaks to the downside, this is a signal, like I said, that that it is a credible one, right? So having this average true range filter indicator that is adjusted and adapted to this trend following strategy, in this specific custom design, custom manner, it helps you manage your position, it helps you protect your capital whenever the situation is uncertain, right? When this uncertainty increases, when the sideways increases, right? As the sideways pattern develops, more and more traders would feel loss averse at the resistance and they would sell off, and refusing basically to let the trend develop because they would assume, okay, if the trend is likely going to reverse, so I'm afraid I'm going to lose my profit, so I better just close it now, right? And it's of course irrational because the main assumption is that the trends continue, right? So you're going to basically 70% of the time see those trend reversals within the range, and outside of the range, the 30% of the time is the movements that or were following. This is exactly what I focus on, right? And having this credible, reliable volatility filter applied to my trend following strategy is exactly what helps me not get knocked out of the position. Basically, when this sideways kind of like a movement, just continues. Right. At times, I will get, of course, chopped in here, and I will lose 70% of the time. However, because I chase those longer tails, right? Those longer tails are going to be upside oriented, upwards oriented in the bull market regime, and they are going to be downward oriented and cash promoting in the bear market regime, right? Which is where for most of the year last year, for the most of the 2022, I was staying on the sidelines, which means I was jumping in on the bandwagon on the breakout signal to the upside. However, the bear market is basically defined in a way that the upward trending movements are corrective tides and corrective waves, right? Corrective waves, which means that they are not persistent and they are short lived and short term, right? So having those again, having those major tails developing to the downside is what was the cash promoting, right? And instead of overall losing a couple of millions of dollars, last year, I lost maybe 10%, 15% of my portfolio, right? Maybe $100,000 to $200,000, maybe at best, I don't know, right? And this enough this itself is enough of a reason for me to continue to use that. And besides, when the market has turned, and it clearly has turned, and it changed the polarity and changed the regime, it continues to move up and climb up in a consistent and very credible manner, reliable manner with confirmation across many different techniques, right? This is where you want to focus on the right trend following breakout system, right? That is going to help you maintain and trail your position higher, because I entered $715,000 at $22,000 basically here, and I'm still riding this trend, and I'm still writing, and this is so far made me, in total of it, just to last 2 months, ever since this signal was produced, just the last 2 3 months basically made me over $500,000, right? Just for basically following those two major breakout signals, right? So those two trends signals basically compensated in two trades or two three trades, any small tiny losses, right? I'm going to get chopped 70% of the time in the sideways. However, when the tails develop, This is where I rally along with the trend because I get this credible, reliable guidance from my Barbecued Pro high time frame trailer guide, basically, right? And it's guiding me higher. It's guiding and helping me decide about the position stop placement, which I know that is credible and reliable because if it's broken, it's a reliable breakout. It's set in this way, it's custom designed this way, right? To show off reliable reversals. Even though some of them are going to, again, intensify it as the chop and noisy false breakouts, then this is what I'm trading for. This is what it lets me develop those major tails, right? And easily, it made me over half a million in just 2 or 3 trades in 2 or 3 months, right? So that's the power of trend following. That's my favorite strategy. And if we go lower, like I said, come back to the please recall to what I was saying, at the start of the video, is we are looking at more noise and more noise the lower the time frames we pick, right? So I want to focus more on the trend following strategies because the trends are emergent and clearly distinguished, and clearly present in the longer time frames. And I do want to take a step lower and basically focus on more noisy environment. More noisy means mean reverting, right? You do assume that the market is going to turn and bounce, move back and forth between the boundaries. That is going to reverse at those boundaries. So it means that it's going to oscillate around certain moving average, which is probably flat, right? So trend following strategies are the opposite of mean reversion strategies. And the lower the time frame you pick, the less of a trend you have and the more noise you have. So it means that you do have to focus and shift your focus away from the high time frame trailer and focus more on something that could be considered baseline bands, right? The baseline bands is basically what helps me decide with quite a decent certainty about 95% of the time the market is going to move sideways within those boundaries, within the high band of the Barbecued Pro and the low band, right? Those are momentum bands. They are defined by the momentum indicators, and they can tell you that whenever the market hits, the prices hit, the bars hit the upper boundary, the high momentum band, it's likely to reverse, right? And whenever they hit the lower end of the range defined by the momentum bands of the Barbecued Pro, this is supposed to reverse higher. And guess what? When the sideways environment kicks in, it's a perfect indicator to help you decide basically about your position, right? So it's a basically no-brainer. You know that when the market hits, the high band, it's like and it's moving sideways, it's likely going to reverse, right? And when it hits the low band within the sideways kind of like a regime, with no trending environment, this is going to reverse higher. So you can use this as the support and resistance levels, critical regions to play and decide about your entries and about your exits, right? And this is as simple as it gets, right? Because eventually, after the major breakout comes, right, you get a confirmed break outside of the band, which is basically helping you trade higher, right? This is the example of a breakout that you got up here, right? So just come back again here. This is the example of another example of a reliable trend breakout because like I said, 95% of the time the market is going to move inside or between the boundaries as long as it's a trend, a non-existing trend, right? And mean reversion promoting mean reversion environment, right? So when it moves sideways, 95% of the time you're going to have price to be found in here because it is more random, right? And two standard deviations to the upside, two standard deviations to the downside, be it as the volatility measures or ATR measures. Regardless what you pick, the Barbecued Pro momentum bands are going to tell you the support floor and the overbought regions, for your momentum trading, right? So when you trade ranges, when you hate trading trends, just like I do trend trades, and you focus on range trading, level to level, support to resistance, and so on, you can pick the momentum bands in here. And finally, what is the noisiest of them all, the shortest time frame, the hourly time frame, is something that is the most gambling, right? The most gambling. And for the most gambling, you want to apply the divergence systems as well as the pivot signals, right? So we can step away from the momentum bands and just try to catch divergences. And those divergences are going to be present basically within the shortened time frames, right? And So many pivots could be used for short-term scalping. Divergences are present with the Burbicuda Pro divergence system, and it's displaying you the strength of the divergence, the power of it, right? And the greater the strength, 91%, the better the chances the market is going to turn. And most of the time it drops, especially if it's sideways, right? So don't miss this opportunity, by the way. I'm going to throw in a special link with a special offer that ends soon.